The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the Monday edition. This is the 31st of March, very last day of the month. We'll have to see where we close today, but as it stands right now, almost all the key indices have daily sell modes. They've been in sell modes for some time. Sell mode, so in the Chapman methodology, we go from a sell signal, and if it gets upgraded by price movement to a sell mode, it's not telling you, oh my God, sell mode, it means it's going to go double down. It just means that at that point, it's like you've traveled a certain distance, and now you've reached a particular level, and you say, okay, I'm halfway. That's really what it's saying. But it doesn't mean to say that you're halfway. It means halfway to wherever you're going. At this particular point, all we can say in the Dow is that we should, at some point, with this, if this is a sell signal upgraded to a sell mode in weekly charts, which so far that's exactly what it looks like. We're watching the monthly charts to see what that does. The 40,661 low of the 13th of March should be a target. If we take out 41,000 today, we went down to 41,148. Days young, anything can happen. Now, I'll finish this off, and then we'll talk about what could happen. What are the surprises to the upside? And so 5504.65 was the low, around about the 10th of March for the S&P, ran all the way to the 5782 level, arched over. That was where I drew in the resistance. Well, it turned around and came down, and it took out the left side low. It went down to 5488, and right now it's trading at 5531, down 49, all within last night's kind of trading range. A silly kind of night because it really stuck in a low range, and then it had bounces, but it was stuck in that range. All right. So, but look at the weekly chart. Gone to a leg B, sell mode in the weekly chart. The monthly chart went right to the 14-period moving average. It hasn't been there since August of last year. So this is the first time that black 14-period moving average, rising moving average, has been hit. I would say the day is young, but it has been hit, and that's just a signal to say, watch out. Those monthly charts are signal. Oh, I should also mention, we are short via the 3 times short, so we're actually long that particular instrument. It was wonderful when they came in with those instruments that meant, when you're short, you have to put up a lot of capital, and you're not always able to get the shares. They have to be, someone has to loan them to the broker. It's just complicated, and you're much more vulnerable. This way, it's just like you're long, except you're short because the instrument has been made up as a short position, and it rallies. But what's interesting, even with all this fuss, it went, so we long from 580, we came a little bit soft, and look, it hit 766. That's a really big move. And then it pulled all the way back to about the 552 level, and now today's high is 760, and it hasn't. The S&P has taken out the left side low in the arch formation. This is the reverse Y formation, and it never went above 766. It went to 760. As I say, the day's young. And look, this is a wonderful technique. Look, that 9-period moving average went sharply lower, but it didn't break and go pink when the price was going down much, much lower for 4 candles actually. That usually says, watch out, you've got a little spring-loaded move to the upside. It doesn't say you're going to go to a new high, but it does say spring-loaded move, and what a big spring that has been. All right, so as we're standing right now, the QQQ, 1, 2, 3, there we go. The QQQ arches over in the dreaded H pattern and is at 461.84, down 712. Towards the high of the day. That's a good sign. 467.01 was the low of the 13th, right? Yep, the 13th of March, and ran all the way to the 490s, and now it's come all the way back and has made a lower low, so that means it's a leg B to the downside in the weekly chart. I don't want to go through all the technicals. I want to just finish the next two up, and that's IWM. The Russell 2000 went. I've been talking about that 200-period moving average In the weekly chart, it went to 197, hit it exactly, had a big spring to the upside into the 210 area, and now it's taken out that 197 low. It hasn't closed yet. The day's young, but it went under it. It went to 195.49. Let's see where it closes today. But this is now a leg D. It's already in a leg D to the downside. We made a double top peak D. This is the Russell 2000 iShares, small caps ETF. 244.46 was the high in November 2021. Plummets down to around the 160s, has a good bounce, and then it arches over, makes the pattern that I call the lowercase h. That goes to a lowercase m, takes out the left side low, it goes to 161.47, October 2023, and whoosh, that is a peak A, peak B, peak C. What do we always look for in our Chapman methodology? At least a D in a buy mode. It had a peak E in the weekly at daily 230.70 back in Feb. Back in November, it hit 244.98. Well, 244.98 was just what? 52 cents above the November high. And now it's come back at peak D in this beautiful price time match. And look what's happened. It's gone under the 9-period moving average very sharply. But that 9 in the monthly chart hasn't turned negative yet. So this is going to be a work in progress. I'm going to go to the SMHs, which is the is the semiconductor ETF. It did take out in the arch formation, took out the left side low in the 210 area. Here it is. It hits 204.51. Trying to bounce is at 27.97, down 4.2. So far, now I can go to what I wanted to talk about. No, I just wanted to finish the XLK, which is the S&P Select Tech Spider Fund. Monthly chart had 3 very tiny higher highs to all-time high, with long wicks. And it says, that's a real struggle. It made to a peak G in the weekly chart. This is the S&P Select Tiger Spider Fund. And look what's happened. After the long doji candle, it's gone way under the 14-period moving average. But that monthly chart is still looking pretty darn good. It doesn't look great, but it looks good in terms of using the 914. The weekly chart is in a sell mode, and I'm watching this very closely because this is that tech sector that since November, December, I've been saying, we're looking at this and we are wondering whether or not the semis are going to buy the semis and they are going to drag the market down, but that it would include the tech sector, and will the tech sector come down, and what would take its place? Well, I found a couple of stocks, as I showed my subscribers over the weekend in my my video that was on Friday afternoon, in my hour-and-a-half long video, which was really I don't know, if anyone's interested in my work, I haven't been having public webinars. I've had just private for my subscribers. Basically, every week I do an hour to an hour and a half long, and it's like a webinar because it's an educational thing. I try my best to explain what we're looking at, why, where the levels are that we've got to look for support, etc., and what we've been doing and what we want to do, and what in this environment, what has been working. Now, let me just go to this and say, so within the S&P Select Tech Spider Fund, this is a significant down candle. I've got a break coming up. Down 144 on a day like this. That's fantastic. It should be down 544. The day is young. We'll see what happens. And I'll talk about any surprise to the upside and what it would take in a moment when I get back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I had a question about peak C failures in the market. In the Chapman methodology, the chances are going to all-time highs. It is very rare. It happens, but it is extremely rare to fail at a peak C at an all-time high. But underneath that, you can always fail. That's the rule. The rule is that when you are under a previous high, you want to get to a peak D. Certainly you want to get to a peak C, the third highest peak in a retracement back to the top, above the left side high. That says, wow, that's great because you could still make a D. But you can fail underneath it. Be prepared. That's how you get those dreaded H patterns. Here's Citibank. Look, down $1.20. There's a peak C. The 9-period moving average deflected lower. That says, oh, be careful there. This can keep going down. Well, it's on the 200-period moving average. So I just wanted to clarify that. I'll say it again. In the Chapman methodology, it happens when you're looking at thousands and thousands of stocks. It's amazing how many go to at least the fourth highest peak D, certainly in the daily charts, usually in the weekly and monthly, before they fail. It does happen, and what happens is the tide is stronger than everything else. So if the tide, like now, turns down, and the larger tide, we haven't got the monthly yet guaranteed, but when the larger tide, certainly the weekly charts, is turning down, it's going to drag the daily charts lower. So I've got that out the way, number one. Number two is when you're in favor, like Palantir was absolutely in favor. It was the darling going to the high back in February, around about the 18th or 19th. It goes to 125.41, a monthly chart peak D, daily chart peak E, leg E, and then it goes to peak, and a monthly chart peak E. When you're in, you're in. That's the stock market. It means that you can say, not sure about the earnings, not this. When you are the favorite, everything you do is perceived positively in the market. When you're out, you're out. Right now, Palantir is out. It's in the sector that is out. That's in the daily and the weekly. That could come back, but right now it's out. Look at Tesla. I spoke about this before. Then when it became a personal thing, that Musk was Tesla. Not the brilliance, not the ingenuity, not the fact that he took a company. Can you imagine building an automobile company from scratch using technology that's never been done before? It doesn't cost millions, it doesn't cost tens of millions. It costs hundreds of millions just to build the equipment to deal with that. I mean, it's just a brilliant, brilliant move. You've got to give credit where credit's due. And everyone was saying, oh, yeah, that's fantastic because this is ecologically wonderful, etc. When you're out, you're out. You can even spew whatever it is on a Tesla and nobody does a thing because when you're out, you're out. And that's what I was saying about Tesla, that because it was for other reasons, but because Musk lost his focus on Tesla, that I was looking at it and saying, I think that has seen its top for quite a while. I wonder what Ron Barron is going to do, as the guy that was so brilliant in buying Tesla and supporting Tesla. He has, I don't know how many millions of dollars he's got wrapped up, billions maybe, in Tesla. And what do you do in a situation when the media turns something, and I don't want to go through this politically, but I'll talk about it just in terms of what I'm talking about right now, Tesla. When the media turns something into a dirty word, that dirty word is usually one word, in this case, Tesla. Boy, it's tough. I don't know how they're going to get out of it. I don't know what they're going to do, but they might have to change the name. I don't know what they're going to do. But at this particular point, it's tough. And there are people, I mean, now you see, everywhere you go, you see Teslas as common as the Toyota became when General Motors was building those pathetic cars back in the 1980s. And all the Japanese companies were building their cars better and better and better. And Ford and GM, all the American companies were building these plastic parts, and it was just terrible. So all I can say is that it's got nothing to do with the car right now. It has to do with the image, and that's really tough. Okay, got that out the way. And let's see. Okay, so I wanted to do this. That's Palantir. Another question came in. Could you just go back to the gold? I haven't quite finished. So let me just go back here. So gold made an all-time high, as it has for some time now. It's been fantastic. And it went all the way to 3160. I've got a measured move that said 31, I believe it was 3182. I don't have it right in front of me right now. 3182 was an area that I'd be looking at it and saying, all right, is this now getting a little bit toppy under other conditions? Not the fact that it's in when you're in, remember? And gold is in. So there are a lot of questions over the weekend. People say, why is gold moving? I've been talking about this for a long time. Gold is the currency of safety geopolitically, economically around the world. When countries get very nervous, when huge financial institutions get very nervous, my experience has been that they tend to go to gold, just as it was back in the Tsarist days, and you can go back to China, you can go anywhere you want. But gold, putting gold nuggets in your shoe, saved your life. I know people that happened to in World War II, and all I can say is that's why gold, and that's why silver is lagging. We got stopped out of our silver share today. Still made money, but that was I wouldn't say it was a surprise. It was just a surprise that it didn't have the catch-up move to gold. It got very close, but it didn't quite get there. And if you're looking at the SLV, look, you'll see here the SLV. So silver made a peak D. Remember, D is your objective in a buy mode, a buy signal. And our target was 35.79, and it got to 30. I think it just missed it. 35.20. So just missed it, and now it's pulling back. Some with its double top. I'm watching it closely. GDX was the question. Yeah, GDX made a leg D. It's probably a peak D today. And I'm watching it. Now, this is going to be very interesting because in the Chapman methodology, when you start your buy signal to buy mode, this is the low. This is now the GDX. The GDX made a low of 32.84 on the 21st, the week of the 21st of June. Goes peak A, peak B, peak C, peak D at 44.22. Comes down very sharply to around about 33.30s. Then it has another rally. Well, 33.30 is the very last low was 32.84. 32.84. So that means this could be, in fact, called an E/B, because if it took out by 1 penny that left side low, you'd have to start fresh. It starts a brand new potential buy signal to buy mode. So here I can say I got to be a little careful. I'm going to call this E/B. So yeah, uppercase on the way up, A/B. But it's a leg E in the monthly, and it's gone over the very long-term Chapman Wave Inside Track repellent zone. But this is a monthly candle, so we have to see where it closes today, then we have to see what happens in April. But so far, it's a very positive that it's gone. And the technicals, 9 is way over the 4, the price is way over 14, price is way over the 14 in the monthly chart, the GDX market vectors, gold miners, ETF. MACD's done this M-shaped pattern that's very strong. On balance volume, very strong at a new high. But the stochastic's only at 80%. Oops, I'm sorry. Why is that the green shine? Oh, I didn't mean. All right, at 68%. That's not very good. So it either gives it a lot of room to go to 80%, or it says, oh, you got to be a little careful here. So I'm just saying that the GDX, I'll go into it further as soon as we get back. Dow's down 184. S&P's down 63. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, so a couple of questions, and then I'm going to get to what could we look for as a bounce? What would it take, and what would I anticipate? Okay, so I'll go backwards. APH was asked about. This is Amphenol Corporation, down $1.65 at 64.94. Yeah, you see, and it made a peak E in the monthly, a peak F in the weekly chart, and this very short terms made a peak D. The technicals are still pretty good, and it is arching over. So if the 9-period moving average crosses underneath the 14-period moving average at the same time that it goes under the 200-period moving average, I suspect there's a very quick move down to the 62 level, and then there's a chance that it could retest the low that was made at 60.69 on the 10th of March. So this is one of those where if the 9-period moving average holds, and it actually coincides with what I'm about to talk, if I don't forget, about what would a turnaround take. Look at the 9-period moving average. If this holds and doesn't go maybe under 64, but if it holds above 64, that 9-period moving average might hold green, so that if there's any news at all that's going to allow it to spring, it will spring back, and it could get right back into this candle right here of 68.14. So we're talking about probably shorting it. All I would say is looking for a bounce. Yeah, exactly. Good. You said a bounce. So that's the bounce, because that bounce, if it's a general market bounce and then the market comes back down, it'll grab this as well, because it's traveled with the market. Look, up and down. So what I would say in the above 67, was trading at 64. That's a big move, 64. But it could be a big spring to the upside. That's where I'd look at it. But I would probably want to have the candle that has a lower high after the bounce, and that's the clue. We can look at it together, but in the meantime, so WFC, Wells Fargo, WFC, Wells Fargo, yeah, made a peak E, A, B, it's a C. This one has the 9-period moving average pink, so at that point you've got to be real careful. Because I have to talk about that as well. I'll do this just really quickly, and then I want to talk about what would it take for a sudden move up, and how would it be, what would sustain it? That's really the question. Bounces can happen. So remember, this is the monthly chart. Look at that monthly chart. This is the XLF in pink. That's the financials, and the SPY 500 in S&P 500 in blue. And look how they've corresponded beautifully, even to this turnaround with highs in the XLF, the financials made in March, but not only in February in the SPY. So this is the first monthly candle. There's no way on earth that it could, by the end of the day, move higher. So whatever happens next month, that's still going to be a peak right there for the S&P. For the XLF, look what you've done. You've had this huge pullback, but if you're looking at the charts, the pullbacks sometimes occur and then have a retest of the high. So I have to just say to you, this is a chart to me. This is absolutely a critical chart in the sense that the lows have been almost coincidental. Right there. There's the ictus at the bottom. It just coincides beautifully, right? The ones at the top are almost exact. There are occasional misses, but not by much. And this is a miss by a month, maybe. So I'm watching this, because if the XLF at any point suddenly turns around and rallies sharply, that could be something that I watch very closely, because the financials generally have held very well. Look at this big spike we've got now. So I was just about, I should have spoken about the spike before. I'll do that right now. So, another question was, could I look at, now I've lost it. What was it? CELH. So this is in the counter trend rallies. This is what I'm talking about. That there are certain sectors, and I spoke about it last week, that were defensive sectors. Look, this is Celsius Holdings, Inc., beverages, manufactures and markets and distributes, trading up 6%, up 2.07 right now, 35.73. So and this is basically a counter trend remove, because look, this looks like the Eiffel Tower, straight up, straight down, going to the high just under 100, and here it is down in the 20s, and it bounces, and boom, it goes to the 200-period moving average of 38. So this is what I'm talking about. There are sectors, and I've spoken about it in my newsletter. Every day I've been talking about what's been working. I haven't really wanted to go into any of them right now, because now I can talk about what I want to do. So you've got the volatility index screaming to the upside, went to 2480. Hey, 2957 was the high on the 12th, was it? Yes, the 11th, 2 days before the 13th low. So isn't that interesting? It went to the 200-period moving average and it's running. This move in the weekly chart, the way the 9-period moving average is just steadily moving higher, the MACD is moving higher, the prices, if you look at a midpoint, if I put the midpoint right there, majority of the time it spiked above that trend line in the middle at about 2130 in the VIX, in the weekly chart, and it's a rectangle formation. But we're starting to see moves that now are closing, or at least trading for a fair bit of the week, way above that level. So that says to me, be careful, because of the magnitude of the fantastic stocks that were going up that have now taken out key, like Amazon, etc. Tommy was talking about it in his show, Morning Market Kickoff, that have taken out really important lows. So that to me says the rotation is ongoing. It's very selective. That's number one. Number two is, now let's go to the surprise. Let's just say tomorrow, Tuesday, I don't know when it's going to be, first thing in the morning or over the period of the day or in the evening for Wednesday. I have no idea. But let's just say that the tariffs come out, and because of what the tens of the billions, in fact, that some countries, companies in some countries have said that they would put to work here, especially in the auto area and maybe in the semiconductor area, there's just a kind of a smoothing out of the anxiety. What would happen? Well, if it's tomorrow or Wednesday, this VIX index would come down, but the 9-period moving average is very close to turning up, but it is an emotional indicator, so that all can change. That's why I always say Chapman Wave Peak Ds in the VIX index. I take them seriously in the sense that we made a D, now you should be able to pull back, and you pull back, but everything else is specific to the Chapman Wave. The VIX index, I just do it because I know there are many people that I've spoken to who've done my courses for years, and they say to me, I don't look at the weather, I don't look at any chart without counting the peaks. It's just what you do because you get used to it, right? So let's just say, don't tell me there's another break coming out, that we get a sudden surprise to the upside. I'll talk about the sudden surprise to the upside, the implications, but the endurance that has to be, you have to hold, and I don't see anything yet that can give us conviction that it's all over. And that's not the case. I'll be back in a moment. Now the Dow's only down 33. S&P's down.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Let me show you the XLE. This is the S&P Select Energy Spider. If I remember, I spoke about this walking the 9-period moving average in this uptrend, the inside track propellant zone in the weekly, in the monthly chart. Good. The weekly needs a lot of work, but it's doing quite nicely, and it's up $1.42 at 93.85, and it should go to a leg D in the daily chart, which would take it to not an all-time high. That goes all the way back to about June or so of last year. So that's working. Another thing that I want you to do is to just discuss this in terms of going through sectors and saying what's not working that was really amazing. Look, over $110,000, $110,975 was the high back at in November or so of 2024. And then I made that double top, and I said, I'm nervous. We do have the iShares, the IBIT iShares of Bitcoin, but we've got a much lower down there. So we've had a lot of room taking little bits off. That's what we do to garner some profits. And look what's happened. It's the 9-period in the weekly. It's made a peak D in the daily at the Chapman Wave inside track repellent zone, right? So it's arching over. The weekly chart has gone negative with the 9 negative. The MACD is very negative. Stochastics down at 21%, and the on-balance volume, there's no volume there. And it's a peak D in the monthly chart. So as I see it, and that's going to be really important, as I see it, I spoke about this before, and I said something. A company like MST. Strategy Inc. used to be called MicroStrategy Strategy Inc. makes a high up in the almost the 550 level, 540s. Right there. This is, I think it was October. The week of the 22nd goes to 543.00. Oh! I did have that written down here, I think. Yeah, 5.3 round number high, the 23rd of November at a peak G, and then it comes down, makes a dreaded H, pulls back, makes another dreaded H, and I said, this is whatever they're doing. I wish I could contact somebody there. I don't think this is the right thing to do. I think that Bitcoin at this particular point is still digesting those huge gains. And it's going to take at least another couple of, I could be totally wrong, but the chart says that it could take a little while longer before it actually changes from a down mode. In other words, the tide being reversed to down and to going back up. And it will take a move back, probably 95,500 on a weekly basis. A close there says, okay, maybe you can go higher. But look at the move, 110 down to the 78,000 level. I mean, that's pretty steep. All right, I'm done with that. Now let's go on to this. So what would be the surprise? So the surprise tomorrow, I'll just go to the Dow. Why not? The surprise tomorrow, and the Dow actually is acting best of all because it hasn't taken out that left side arch lower, 40,661. Shh. Don't let the market hear you say that. But most importantly, what would happen? What would happen is that there's an amelioration of some of the tension. So you will get this immediate spike. It could be 200 points. It could be 1,000 points in 2 days. But the real essence of what we're looking at is that everything that's promised is not Wednesday or next week or April. It is fabs that have to be built. It is companies that really have to start fresh in many cases. They have to find the space. They have to do a lot of work. So we're talking about years. But it's a really good sign looking out, okay? It's something that we've been speaking, at least I've been speaking about for years. How could we have lost so much manufacturing? We should have been working here towards building up so that we have workers that are satisfied in their work, good paying jobs, etc. Okay, got that out of the way. Here's the other thing, that it could be very selective because the IWM, the Russell 2000, is still the total laggard in this whole thing. Yes, it's testing the 200-period moving average. I'm watching that closely. But the relationship of, let's do this again, the XLF, the financials, the core, the key, money center banks, the big capitalized financial companies, all-time high in March at 52.28, pulls back to the 200, almost the 200-period moving average. Look at this, holding beautifully. Usually in bear markets, these are the guys that tumble and tumble and tumble. They haven't done that. The iShares have tumbled. Look at that. That's the broker-dealer, but they haven't crashed, but they've tumbled. So the relationship was the XLF to the KRE. Well, the KRE has not been able to hold rallies. It's done the dreaded H once. Is it going to do it again? It's right, like the IWM, it's on the 200-period moving average. The relationship was the XLF, big caps to the smaller caps, the KR regional banking ETF. That hasn't worked yet. And that's the same thing with the S&P that I've used as an analogy, a metaphor in the sense, the XLF, sorry, the S&P to the IWM, the Russell 2000s. Okay, so I need to see that work, and I think that's going to take until maybe the summer before we really get some action, and that's the way I'm looking at it. So if there is a turn to the upside, you've got to treat it immediately. You've got to grab it, and you've got to take it, and you put a trading stop on whatever it is that starts to move higher, and just ride with it. Take. If it keeps going from your entry point, you keep that as your core position for the very near term, and you can add trading positions on the way up with trading stop and tight stops. That's the only way I would do it. That's the way I'm planning on doing it if there is a turn to the upside. Why? Because this rubber band has really been stretched to the downside. I mean, if you're looking at the weekly stochastic on the Dow, it's at 24%. The monthly is still fantastic at 84%. There's a huge divergence. Remember, I call this the sandwich. The daily chart looks horrible. The monthly chart barely notices anything. It does something. It's certainly not very pleasant looking. But that weekly chart, the technicals usually suffer tremendously. They take a long time in the weekly chart to get back again. So this is the sandwich. The one in the middle is the weekly chart, and that's the one that takes a long time. And for the weekly charts, to really see the 9-period moving average, you'd have to be Dow 43,800 to 44,300. I'm not sure what's going to get it there and hold. It can spike, but I don't know what's going to get it. So I just want to get that out the way. What would I look for? I'm going to prepare. Look here, here's the VIX index once again. The VIX index is not at the high. Now, there's some things that happen on Fridays and Mondays, like the Friday 2009 was the Dow's low in March the 6th. That's the one we got right at the bottom. And then Friday was the S&P low. And we've seen that over the years, October. Well, today's the day to say if we get a turnaround and we actually spiral tomorrow, then what's going to be important is that we haven't made the low, because the low occurs when the VIX index is screaming to recent highs and everyone's just throwing in the towel. They just throw out the baby with the bathwater. That's the low. A low is different, and I'll go to this chart as we go into the break, and I'll talk about it when we return. And here's the chart, not this one, but this one right here. I'll be right back. Basil Chapman, Tiger Technicians Hour, and the Dow is up. No, it's down 11 points after all of that. I'll be back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I've also looked at the 1 minute chart, the E-mini. It went to a peak D. It's come all the way, I mean, this is crazy. It's gone all the way from the 55.33 level to 55.80. 55.33. No, that's a pretty big move. Okay, so this is what I want you to do just before we wrap up. Check out my opening call daily newsletter. I think that you will find that it's really people say that it really helps them a lot. So this is what we're looking at. We've gotten into the Chapman Wave Inside Track on this. This is my Chapman Wave Dark News Index, DNI, using the Dow daily chart. Dow is now down only 28. It was down. It wasn't down as much as I would have expected. It was down in the 300s. But look at this. Inside track. Is this going to become an internal low and that becomes a residual low, or do we start over another internal low and residual low? this is exactly where other things can happen. So I have to be prepared that, Trump is the 51%er. He just wants to win by 1% and he calls it a win. So if he says he's not watching the market, or I guarantee he's watching the market. My suspicion is he doesn't want this to go very much further, not at this particular time. If it does it a little later, that's fine. Right now, he wants to sort of save the day. So there's an amelioration they're going to go. I would not be so. It's not the Monday. If the Monday is the low, under these circumstances, people are not throwing in the towels. They're just stepping aside and saying, I don't know what's going on. This is horrible. That's different. So I'm anticipating this is exactly the moment where we're going to see whether or not there's going to be a rally, a bounce that becomes a rally. I don't mean just a bounce and within 2 days we're back where we started. I mean a bounce that actually continues with hope, because I'm not sure anything is as tactile as you can actually put your finger on it right now as definitive. It's all a work in progress. So let me just be clear. We've raised cash. We're still short the Dow. We're still short the S&P. Not as heavy as I would have liked to have been, but that's okay. We're managing very nicely, I think, to conserve our capital. That's just the most important thing in this business. And even more importantly, I am ready for anything right now. I've taken off the list there's a kind of right at the end of my